Welcome to the Lights On podcast, featuring stories behind building and running successful hotel businesses. Let's get started.
Welcome back to the Lights On podcast. I'm Kin Seo, CEO of Lights On, and your host today. On this podcast, we share stories from across hospitality about building and growing hotel businesses. This episode is sponsored by Lights On. Lights On helps hotels grow revenue more consistently by managing pricing, distribution, and digital marketing together. We help hotels identify new revenue opportunities so they don't leave money on the table. We also run the full revenue and marketing operation so the team on the ground can stay focused on the guest experience. If your hotel needs more revenue growth, visit lightson.co to learn more. Our guest today, Ko Olina, principal and co-founder of Powell Aucello, a Honolulu-based hotel brokerage and advisory firm. Ko spent over 30 years in the hotel investment market in Hawaii, first as a broker at CBRE, then as a VP of development at both Marriott and Outrigger, before co-founding Powell Aucello in 2020. The firm advises hotel owners, lenders, and investors across Hawaii, Micronesia, and the South Pacific, and has been involved in over $1.5 billion in hotel real estate projects. Ko, welcome to the show.
Well, thanks for having me, Keen.
Yep, super excited because this is a very interesting angle just from all the other interviews that we did in the past. Because you're the first brokerage and advisory firm coming to the show here. Just before we getting into the meat of the questions, right? Just getting where you and your partner started would be interesting. So you co-founded Powell Aucello in 2020, just at the beginning of the pandemic. After decades of working for other people, other big companies and all that, what made that the moment to start your own firm felt right, like at that time?
Well, I enjoy telling the story about Tim and I meeting because we were competing. I was working for Marriott Development and Tim was working for Hilton Development, and we were competing on a property over on Kauai, and it used to be the Courtyard in Kapa'a, but now it's the Sheraton in Kapa'a. But so my boss at Marriott encouraged me to meet Tim. He said, "You should meet Tim. He's a great guy." And I was wondering, gosh, these guys are really friendly among their competitors. And that is one of the nice things about the hotel industry, because even among competitors, people are pretty nice to each other. So anyway, long story short, I got to meet Tim. And then over the years, we stayed in touch and we tried to do work together on things together. And so we spent... And then finally in 2020, when Tim retired and moved to Hawaii, we sat down and we said, we should work together because our skill sets are very complementary, where, Tim's got really strong on hotel operations, hotel construction, also on franchise agreements, management contracts. He's really strong on those. He's done thousands of franchise agreements at Hilton. And then I'm better on the valuation and financing and underwriting side, sort of the finance and numbers side of the business. So we make a nice partnership because we have very little overlap in our skills. So it's been a lot of fun to work with Tim. I will add, though, that property we're competing for, it did become a Courtyard by Marriott. So I never hesitate to tell anyone that story so that I can rub it in, of course.
And just got an upper hand over your partner.
Exactly. So I enjoy telling that. But we formed in 2020, and we've been really enjoying watching our business grow. And we're starting to be, we've developed a good reputation in Hawaii as go-to people on the hotel investment market here. And we take it very seriously. We do our homework. We try to know everything that's going on in the market, whether it's, visitors coming to Hawaii or the financial markets, and who owns and who's buying and who's looking to buy and who's looking to sell in the Hawaii hotel investment market.
Yeah, and just me personally, I gotta say, like when it comes to anything, boots on the ground, knowing the latest and greatest about like just all that transaction landscape in Hawaii, like Tim and Kevin will be like who I would be going to. There's honestly no one else who is better, more informed, just seeing to the forefront of everything happening on the ground. So just good tips for everyone thinking about the market in general right now. What,
Thanks.
yeah, what did the first year in business look like? Because there was, when you guys just starting the business together, like, right, in an interesting time, during the pandemic, right? What was the activity side? Was that pretty quiet? Was there lots of activities going on? People are calling all the time. What was that like back then?
Well, it was an interesting time because we decided to partner up at the end of 2019, just as Tim was had his plans to retire, and then obviously the pandemic hit, and then the islands got shut down. So the first thing we did, one is our business plan of the same old market cruising along like 2019, which was a very good year for the hotel industry. That all changed, and then we actually we're looking at a market where it looked like everyone would get foreclosed upon, if the state didn't open, because the state was shut down for quite a long time. We were one of the more conservative states in terms of shutting down entry. So for a while, it looked like there was just going to be a bloodbath, and we actually partnered up with some other folks, and we're offering receivership services. And helping people through tough times. But so and that changed very quickly too, because once the state reopened, we had a real big boom in travel, and we got a real big push from the pandemic, post-pandemic. So the market changed again, and it was doing great. More so the neighbor islands than Oahu. And we still see that to this day, because we really have only received about half of our Japanese visitors coming back from prior to the pandemic. So Oahu hotels are struggling a little bit, but the neighbor island hotels have done well since the pandemic. But to answer your question, there was very few transactions at that time, but the good news is the state opened up, and most of the hotels survived, and so that part was good.
Yeah, that's interesting. So, kind of getting into that side of the world, right? Especially, you guys touch on, quite a bit of transactions, especially on the island here. When you look at a Hawaii hotel today, and you're trying to assess its investment value, right? Whether from a buyer perspective, from a seller perspective, what are the 2 or 3 things that actually move that number and the valuation? And what do owners tend to overweight?
Well, that's an interesting question. The Most owners, of course, overweight the value of their property, because we all think our property is worth more than it is, and there's extreme cases where it's really hard to work with with a client because they're completely unreasonable. Uh, but um, but that's sort of just human nature to an extent. But One of the challenges we have in the market now is that the going in cap rate on transactions is higher than it was a few years ago, and that's mostly because interest rates have gone up, and with that, cap rates have gone up. So we're probably looking at 100 basis points, maybe 150 basis points above the peak. And I would say the peak was probably, 2019, when, properties in Waikiki would be somewhere at a 5 cap, and could be lower if there's a story. So it was, you would even see stuff 3, 4, 5 cap deals in Waikiki. Um, and a little higher on the neighbor islands, another 100 basis points or so higher on the neighbor islands. Well, what's happened is that since then interest rates went up, and cap rates do float a bit with similar to interest rates, especially because there's less arbitrage available through financing. So what we've seen is owners now, prices because of that have had to come down, but we haven't had a lot of transactions since then. So there's not a lot of hard proof on where cap rates have settled for Hawaii hotels. Uh, so that's a bit of a challenge.
Yeah. Is that also due to kind of the lack of enough transactions to really get a more objective cap rate? Because everything is based off of comps, and when do you have transactions. So in that case, that creates a gap, right? Always buyers, probably still got stuck with the previous, the high, 4 or 5 cap, because that was the high point of the market versus the reality right now. Interest rates gone up, and likely lots of hoteliers are struggling with the top line revenue because we've been running lots of the operations for our hotels in Waikiki too. So kind of that, I think that definitely creates a gap, right? Then from for the most part, especially investors coming from the mainland, I'm sure it's a different dynamic. They're probably going to be having motivations based on what they see in the mainland, now having conversation with what's happening on the Hawaii. So there are quite a few disconnects throughout that communication circle, right? How
Right.
how do you facilitate and just telling any potential investors right now what is the best course of action in terms of like interpreting the current state of the union in Hawaii?
Right. Well, actually brings up an interesting point because you talk about mainland investors. I historically I feel like Hawaii is about 150 basis points below the mainland in terms of cap rates, and I'm talking, primary markets in the mainland, not tertiary markets where cap rates could be 10, 12%. But primary markets, we're still lower than most mainland markets, and the reason for that is that adding to supply here is extremely hard. So if you buy a hotel in Hawaii, it's extremely unlikely someone's going to build a hotel across the street from you and compete with you. So, so first of all, we have to get, new mainland investors comfortable with that. Is a big challenge, but once they learn and they see that is the way the market, and it's consistent, it's not changing. That's going to stay that way for a while. So if you want to play here, you have to go in and you have to be a little more aggressive going in, and then hope to make your money on your exit, because when you go to sell, there's still not going to be any new hotels built around your house, your hotel.
Gotcha. So kind of flipping that table on the seller mindset, right? The current, hotel owners on the island, right? Especially with the limited supply growth, which is more like a mode for the seller side of things. So how does that scarcity shape the way that you would advise sellers on timing? Because people like to time the market. One way or another, have a different opinion whether you should do it. But what would be your take when the seller comes to you and asks that question? Hey, Kevin, is this now a good time to sell?
Well, yeah, I think it is a good time to sell. And I think part of that's because there's a lot of demand still. I mean, a lot of people, a lot of our closest friends in the industry who keep tabs on Hawaii and want to buy things at Hawaii haven't really had much to buy in the last few years. There's been very few properties offered to market, and even fewer at reasonable prices. So, if you're coming to market right now with a reasonably priced asset, there's going to be a lot of demand for it. And then the other important thing is financing is getting easier to obtain lately. And so you will be able to, if your deal makes sense, you'll definitely be able to get the financing you need too. So a combination of those would make it a good time. Further, a lot of owners are, probably because it's been a tough time to sell, a lot of owners have long exceeded their normal hold period. So I think, hopefully we're going to benefit from some of those owners saying, okay, we've been in this 7 years. We were only planning on being in it 5 years. Let's move. Let's sell.
Gotcha. And does that perspective the same for properties that are bigger versus smaller? For example, lots of the audience, for this show is the more boutique and independent hotel owners that are smaller, right? So,
Mhm.
is that niche like attracting the same level of interest? Because just how I see it is like, private equity, right? Institutional money investors, they are typically not as interested in a smaller properties like
Mhm.
that.
Right. Yeah. So, I mean, if you get down to, 8 rooms or so, then you're probably talking, it's going to be a mom and pop kind of a thing. It's going to be someone who, who's wants to have a hobby, or someone who wants to add to a portfolio, the buyers for that. But then again, there's some entrepreneurial investors when you start getting into 20 rooms, 30, 40 rooms. There's going to be some mainland capital that's going to want to add that to a
Hmm.
portfolio, and oversee the management of that asset in Hawaii, even though it's only, say 20, 30, 40 rooms. So
Mhm.
those that's now you're at the point where you're gonna get some interest from some mainland buyers, for those properties.
Gotcha. So in thinking now, as a hotel operators, right, thinking about an exit, some people will think about owning the property forever. Some will think about an exit at some point. So to make that exit realistic, right, what are the things that they have to prepare, right, from a operating history, right? People sometimes look
Mhm.
at price per key and things like that. Does that make sense? Just in compare with the market. But obviously, as a business, the operating history, the P&L and things like that matters a lot too, right? So, how should operators right now thinking about you know maybe from you as a broker, right? When you are looking from an outside perspective, what are the things that people tend to miss, right? That you will look at to judge the performance.
Yeah, so I guess one of the keys would be making sure you're doing good revenue management, and that you are using channels appropriately.
Mm.
Because some small hotel owners, and I actually own a small hotel in Michigan, so I can speak. You hate to pay 18%, to Expedia and Booking, and you're like, damn, I just wish they'd go to my website. But I know that, you need those intermediaries, you need those OTAs, and you have to play with them, and you have to figure out how to best use them and utilize them. And so, because some small hotel owners completely avoid those OTAs, and usually that means they're running a pretty low occupancy, and so they're missing out. I will say, if I encounter something like that, then we can at least sell. We can at least help them when we sell their properties. Explain to buyers that, hey, there's some real upside here if you
Mm.
effectively use OTAs. But doing good revenue management, doing good marketing, getting a presence, a social media presence, having that is important, and those don't cost that much money, and they obviously also increase direct bookings, and so spend time on that. Would be one of the first things I'd say to most folks is really look at your marketing and see how you're doing that.
Yeah,
Uh,
and aside from marketing, Kevin, actually, when you mentioned kind of that channel, the distribution is actually one thing that we do lots of educations about, to our clients and just the more boutique hoteliers, right? Because we often come in with the questions, as an agency, right? They'll be asking, hey, like OTA is eating on our margins. We want to be like focus on direct, which we usually tell them that like yes, definitely direct, we want to help you increase that share, but the matter point that you just mentioned is that having a healthy diversified channel of distributions, because like when the market, the past few years market was great, tourists and visitors, they tend to spend more time looking at direct, looking experience and all that, and now the market's not going as great. Now OTA is actually like having a really great time on their business, which they still bring quite a bit of traffic and business to the hotel, right? So I think the fact that having a diversified, healthy mix of different channels, so that you can pull the levers when the time needs. It's definitely a more resilient way of protecting, not just making revenue growth, but it is a protection, it's a defense play just to make sure that like a property is healthy, like relative to the economy and the shift of the market.
Mhm. Yeah, no, and I think that's where you guys could can definitely help some folks out because I know it firsthand from my what I've done and on the mainland and I think that's something that you guys could help people out because it really is. I mean, revenue management, and I know it firsthand. I didn't come up through the revenue management side of the business. Uh, you got to know what you're doing there,
Yeah.
and you need expert help, and you need to spend some money to get that expert help. It's not ridiculously expensive, but you do need to spend that money to get that help because that will really change your top line and then of course your bottom line.
Yeah, yeah. And sometimes people tend to think, oh, web direct, like there's no cost associated with that. In reality, it's not the case. Kind of to your point, like, you have to spend, you don't have to spend extravagantly, but like, there's gonna be some investment, whether you're hiring teams of people, experts, or even like building your website, running, all these like Google ads, Facebook ads, and all that. Like those are all costs associated with gaining web direct business. And what we find many times is that, hoteliers don't compare that cost side by side to the OTA commission. When you stack everything together, when you look at the cost of acquisition per channel,
Right.
people many times were surprised. Well, they're actually not paying that much less in terms of acquiring direct businesses.
Mhm.
For the most part, it's still great because you own that relationship directly with those guests. Now you can like later on with targeting, email, and things like that.
Right.
There's
Right.
goodness of that. At the same time, like kind of not overlooking any channel. So I think there's a need and use for anything that brings you business.
Yep. Yep. No, I think we're in agreement on that, and
Yep.
would
Yeah.
definitely encourage people to talk to guys like you that understand that.
Yeah. Yeah. So aside from that, like, do you, from a seller perspective, what are the other common mistakes, when it's come to decide whether it's time to sell? I, to your point earlier, people, always tend to have a high value from, like
Mhm.
they think it's worth, a lot more than what realistically the asset is gonna be.
Right.
What, like, are there other mistakes like that will
Oh yeah. Yeah. Probably the biggest mistake is to um, is for owners to take unsolicited offers and run with them.
Mm,
Uh, and then it hurts them in a couple ways. First, usually what happens is the owner has a higher uh, than the actual estimate of their of value. And when they talk to people, they're like, "Well, if the asset's worth 40 million, they want 50." Well, so someone will come along and offer them 50, but then pull out because the deal doesn't make sense at 50, for example. And so now, couple of things. It's sort of funny, and this is human nature. So I'm not blasting anyone, people in particular, but it's just what we do. So once I've got a $50 million offer, now I think my hotel's worth 50. Now the reality was it couldn't get its financing because 50 was too high of a price. So now the owner has that expectation. So then the other mistake they make is then to go from, continue to talk to buyers one at a time so that word gets around that, that hotel is on the market. And the Coconut Wireless here is pretty efficient. And so, if someone's looking at a hotel, we're probably going to hear about it, and then, if it goes on for a year or two, then you're going to think, well, this guy's been trying to sell this hotel for 2 years by himself without any help. And, now, but it's never sold. So then it immediately gets this damaged goods reputation to it. Well, there must be something wrong because the guy's been trying to sell it for 2 years and it never sold.
mm,
So I would encourage owners to be strategic about that and then just say like, okay, talk to an advisor and find out what it's really worth. Um, and then and engage with the advisor to control that process, because it can be a quiet process, but that keeps confidentiality without the market and everyone hearing about it. And then it's also a quicker process. It doesn't drag on over a long period of time, which is distracting for the owner, which is distracting for the employees. If you're thinking about selling, you should get an estimate of what it's worth. And then if you're going to do it, go for it with an advisor representing you on an exclusive basis, and not trying to do it yourself to save the commission. I mean, we talk about 18% commissions for Expedia, but brokers are only looking for about 3%. So it's a pretty small number. I should say 3 to 5%, depending on the size of the transaction. But so that would be my biggest, thing I've seen, and in my 30 years here, is just people sort of shooting themselves in the foot trying to do it themselves. And I guess our running thing here, or our theme here, is that get professional help, whether it's revenue management, whether it's marketing, or whether it's selling your hotel.
Yeah. That's the importance about going with the experts and having the expertise, right? Because I think not just hotel, I think in general, all the other real estate niche and asset class, same thing, right? People think you could be saving on the commission, but in reality is that having a professional helping you, you are much more likely to sell something at a higher value, which by itself pays the commission itself, versus like setting aside hotel for a moment. I think lots of the actually selling the day-to-day, the single family house, right? There's the people get agents, versus there's that for sale by owner sign, where like those for sale by owner, they tend to be sitting on the market for a long time to essentially get the same phenomenon that you said, right? When everyone knows about you being on market for so long, like not that your property is doing anything wrong, but people start having the mental thinking of like, oh, there must be something wrong, and that's why you are stuck on the market. Yeah. So buy and sell, I mean, obviously it's one big piece of what you guys do. I also know that you guys do quite a bit of advisory, right? Educating people on the current state of the markets. I think you also mentioned kind of that, especially you and your partner has had the brand experience, negotiating, looking at that and management agreements. I think these are all are the kind of key moments for owning and operating a property, right? Owners sometimes constantly think about, should I add a flag versus, staying independent. So from that regard, what what are things that people or owners or operators that that don't know, like they should have known what they certain things when they get into those situation of brand or management agreement negotiation?
Yes, I would say it's been interesting. We've done a lot of pretty good portion of our consulting practice has been in brand and management contract RFPs, and helping people pick a brand, and helping people pick a management company. And are most often are two different entities nowadays. There'll be a flag on the hotel, and then there'll be a separate manager. On some very large hotels or luxury hotels, there'll be the same brand as the brand will manage the hotel. But we found we can really this is one area where we really add value. We charge a flat fee. We're also willing, if anyone wants to do some kind of percentage deal on if we get them a better deal. The reality is that, more so, Tim, we do know, what all the brands are willing to do, how much key money they're willing to give an owner to put a brand on a property. That's huge. There's one example of a pretty large hotel here. We won't mention names, that didn't get any key money on a large deal. And our estimate was that was about $5 to $8 million of that the brand didn't have to pay. And I think the owner left that money on the table, and it was sad to see from our perspective, because we know how much the brands will do. Some of the other major features of the contract are the length of the term, the rates that you have to pay for your franchise fees, some ramp up period on those fees. So, those are the kinds of things that we can help people. And we usually find it's better, just like selling a hotel, to create a competitive environment, because we usually would want to talk, if you've got a nice property and you're looking at the big guys, we want to talk to 3 or 4 brands and have them competing with each other to get the owner the best deal. But that's exciting for us, because it's nice when we can get the owner a large key money check, to help them with their renovations, to help them, help their capital situation out, and then get them a good deal with the brand. So that's an exciting part of our business that, we really encourage people. That's another one. Don't do that yourself, and don't just rely on some local attorney who's a good attorney. If they aren't really skilled in franchise contracts, then, you're going to miss out. So in that case, too, give us a call.
That is a $1 million cheat code Kevin just shared. I think for anyone considering that, especially, I think that just come up, especially, brands, they do their sales and business developments, they reach out to hoteliers all the times. You get, interested about that, your hotel not necessarily like, maybe doing like its best, with that brand, that's usually when those conversation happens, right? So just knowing that, like, there could be, 7 figures, 6, 7, 8 figures, on the line when you use, the right professional on your side, right? Just like if you're going to be selling your home, with a broker, why wouldn't you do that, for anything bigger, like, at the scale of a hotel property, right? So, so if you advising an independent owner who is considering adding a flag right now, what questions should should the owners be asking the brand that they almost never think to ask?
Yeah, I guess the first one is the key money, and hopefully, most owners know that, not all do. Is how much key money you can get, because that really can change the situation. The other big question is going to be, how big of a PIP do I need? A property improvement plan? Is the brand going to require? And then, the keys for the brands are, how much of a contribution can they provide? And so some of that depends on the hotel right now. Assuming it's independent right now, you're going to want to see how much contribution the brand gets directly through their website, and then how much they're relying on OTAs. If they've developed a great reputation and are getting a pretty high percentage of their business direct without having to pay intermediaries, then that's more likely to be a candidate to stay independent. But if you've got a hotel that hasn't established a strong reputation yet and needs more marketing oomph, that's the time you want to look hard at the brands to help you do that.
Yeah. And especially all the brands right now, I think soft brand is a thing that has been being pushed a lot lately, right? You're not necessarily like a Marriott or Hilton, but underneath they just saw this soft brand that, trying to retain certain unique aspect of the independent hotels right now. What's your viewpoint on that push, and how should and hotel owners or operator think about the differences, the pros and cons, between a soft brand, stay independent versus having a kind of a solid, proper brand?
Mhm. Well, soft brands are great for boutique hotels. It's unique hotels, and properties that are, existing hotels that are unflagged, because if you're doing a ground up development, then it's easy to build it to a certain hard brand spec, and if you're building a Courtyard if you're building a limited service hotel and you pick a Courtyard, it's just, you build a Courtyard. Now, if you've got an existing hotel and it doesn't it doesn't turn, it doesn't make a hard brand. It doesn't, check all the boxes on a hard brand. You can, the soft brands have been just a godsend for both the hotel companies and for independent hotel owners. And, it's great for Tim and I when we were in the development roles, when they started rolling out soft brands, because all of a sudden it was like, oh my gosh, every independent brand is a potential target now for us, and, and so that is also why there's now, I remember when Marriott launched the Autograph Collection when I was there in 2007. And I was all excited because I had a bunch of properties in Hawaii to go chase with that Autograph Collection. Subsequent to that, Marriott's probably rolled out 4 additional soft brands. And then likewise, so is Hilton, so is Hyatt, so is IHG. They've all rolled out a bunch of different soft brands, and these brands just keep coming out. Every single hotel conference we go to, there's a new launch of a new brand. And it's been tough for people, and even people in the industry, to keep track of what every new brand is. But what that does is that allows someone like Marriott to come in and look at, my hotel and say, okay, we can make this an XYZ, soft brand. And I'm, as the owner, I'm like, great, I get to affiliate with Marriott, but I don't have to completely change my hotel, and I don't have to spend a fortune on a PIP. And then Marriott or Hilton or one of the big guys will put it in their system, and we'll run it, and I'll get to keep my independent name on my hotel. So it's a great win-win for the industry, and that's a real big area of growth, especially among existing hotels.
Yeah, I think it just provides a lot more flexibilities on both sides of the tables, right? And again, there's no one silver bullet that is like the holy grail, right? I think it more than anything, now all these like soft brands introductions create a more complex landscape and selections and options, for negotiation and, for hoteliers to choose from. So, just another reasons why having an expert on your side makes sense when it comes to navigating, all of, these kind of options and what will be the most optimal, all depends on the situation.
Right.
Yeah. So, actually, one kind of getting to the last segment of the show right now, it is a more from my own curiosity as well, because you and team kind of landed a really big deal for Hawaii like last year, right? So, you guys represented the buyer on the Ko Olina land deal that kicked off plans for a $2 billion Atlantis resort. 2 billion, I did say it wrong. It is the largest proposed hotel project in Hawaii. What did putting such a like huge deal like that together, like what did it require to even like getting that going?
Well, we were fortunate in that Tim has had a long relationship with the principal at Kam Sang, and known him many years, and they're good friends. And it was interesting. We got really lucky as brokers. The Ko Olina Resort, which was owned by Oceanwide, a Chinese company that's in a challenge situation, they had put the property on the market, and their brokers for some reason, didn't contact Kam Sang, and so they were trying to sell it. They had a buyer in, and that fell through and didn't go anywhere. And we bumped into Ronnie, excuse me, I should just say Kam Sang, and we bumped into them at a conference, at a hotel conference that we go to, and told him about the opportunity, and he jumped in, and everyone was fortunate because Kam Sang is a luxury developer with an impeccable reputation, and they own other really fine luxury properties in the Western U.S. So it worked out well. It was a very challenging transaction, but we've really, really enjoyed, and I've just gotten to know the principals of Cam Sang, and really enjoy working with them. And they're really talented, and it's good for Hawaii because they're going to be successful and they're going to create jobs. They're going to create some new luxury product in our market, which Hawaii really needs. Because right now we're in a situation in the world where luxury travel is booming, and Hawaii needs more luxury product to attract those travelers. And so Cam Sang's going to come along and do a great job of building some really nice properties at Ko Olina.
Yeah, and that parcel, on the west side of Oahu in Ko Olina, it is like one of the last few oceanfront entitled parcels. Yeah, so it is a kind of going back to the limited supply there, right? So especially when you have a solid developer with good reputation coming in with a high chance of success, I think that is not, obviously one property, but I think that just from a state, from a destination perspective, it definitely helps a lot. Like just for the whole industry as a whole.
Hmm. Oh yeah.
Yeah.
Yeah. No, it'll help. It'll be a positive for Hawaii all around.
Yeah. So, what does a deal of that scale tell you about the appetite of major new hotel development in Hawaii? Because we don't come across that often.
Yeah, it's tough. Luxury has been tough to make pencil for quite a while, and which is probably why we see most of the new hotels built in the U.S. They're more like select service, limited service hotels, and but so you have to be really good at what you're doing to make luxury work. And fortunately, Cam Sang is very good at what they do, but it can be challenging because it's one very big numbers, and you really have to nail it because the luxury market can be fickle. Those folks can choose where they want to go, and if you don't do it right, they'll go to some other luxury property. So the good news though is that these guys are really good at what they do, and they understand that market. And because it's a tough market to be successful in.
Yeah, I think it would be great. Maybe like some point down the road, can they bring you back in just to follow on the progress? Because it's gonna take some time, but it
Oh,
is
yeah.
a super exciting project, for the state, for the destination as a whole.
Right.
Yeah. So just last question for you, Kevin, before we kind of wrap up here. Just kind of going back to the theme of the conversation today. If we are now talking to a Hawaii hotel owner who has never thought seriously about the exit. They never had a
Mhm.
valuation done. They never met with a broker.
Mhm.
Where does that conversation need to start? Like, not even. Well, I have my opinion. I think people should always keep a tab on what their business is worth. But how does somebody even start having that conversation?
Yeah, well, one, I would just say call us. If it's a hotel asset in Hawaii, we're the best guys to tell you what it's worth, and then to tell you to sort of identify opportunities for you. Because as we've talked about before, there's probably some value adds that if we're representing you to sell your hotel, we're going to be able to identify some opportunities, whether it's in management, revenue management, marketing, positioning. And so we can help out on those items, and to maximize the value. To when we're selling that asset, we can convince investors, because we have the credibility with investors, that we can convince them that here's a bunch of great value add strategies you can embark upon, which will increase the value of this property.
Hmm.
So the first thing they should do is talk to us, and have us give them an opinion of value to let them know what we could sell it for, and then talk to them about what opportunities they need to work. Essentially, go through a SWOT analysis and say, what's good about your property, what are the weaknesses, what are the opportunities, what are the threats. Go through owners with that, so that they fully understand and are realistic about their property. Because a lot of times when you own your own property, you don't have the same view as the general public does, or the view to what investors are looking for. And so we can help provide that.
I see. What do you wish some of those initial conversation, especially these are like maybe the first time selling, right? What do you wish them understand about the process before going to the initial conversation?
I think it's that, we've spent many years working with investors and we know what investors want, but we also have spent many years in the hotel business where we've seen, ways to run properties more efficiently, to position properties, and to get, to position your hotel better so it performs better. So those are, we're not just a broker that tells them we'll put it out on the market and we can get them $50 million for it. It's going to be a much deeper conversation. So, that's the thing I think we want them to appreciate is that, we take this really seriously and we've been at it a while and it's our specialty. It's not a hobby for us. It's what we do all the time.
Yeah, that's what separates the pro from from the enthusiasts, right? So it needs some real results and the kind of the back history, the track record to stand behind it. So
Mhm.
yeah,
Okay,
it's
good, good. I've
yeah,
enjoyed chatting with you today, and thanks very much for your time.
yeah. Well, last question, Kevin. Where can
Okay.
people learn more about you?
www.powellaucello.com. That's Powell, and then my name, Aucello, Aucello.com. It's the best way to find us, and our website gives a good understanding of what we do, and we'd love to hear from you guys.
Awesome. We'll make sure to put the website on the show note. Thanks everyone. Thanks, Kevin.
All right, thanks, Keen. Great talking to you.
Thanks for listening to the Lights On podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.